Hello, and welcome to Money Mystery No More. Let's talk about correcting your credit score. Everything you buy can impact your credit score. Seriously? Well, maybe. Is it really that simple? Is it really that complicated? What the heck is all that talk anyway, a credit score? You hear about it all the time. You gotta have a good credit score. Don't mess up your credit score. Pay your bills on time to keep your credit score up. Your credit card is gonna bomb your credit score. TransUnion, Equifax, Experian, FICO this, FICO that, and on and on and on. Come on, it's just so much, right? So yeah, let's talk about that credit score. Let's talk about your credit score. If it's lousy now, let's talk about you correcting your credit score and how to make it great. To get the most out of this, be sure you pay close attention to breaking down your credit report and credit score, and listen for ways to use a credit card to fix your credit score by keeping it simple. It's awesome. And remember, hit that subscribe button to keep getting the latest and greatest information. Okay, let's remove the mystery. At a high level, generally speaking, a credit score is a number showing the risk you pose to a lender. You know, someone or some institution that may loan you money. Or put another way, how likely are you, the borrower, to repay a loan on time? In general, credit scores range from 300 to 850, with higher scores normally offering you a better shot at getting approved, plus getting you more competitive interest rates. A high number shows that you have been responsible when it comes to controlling your debt. A low number shows that you have not been responsible when it comes to controlling your debt, and often leads to rejection from lenders, or high interest rates, or higher premiums, for example, from insurance companies. Lower credit scores could lead to higher premiums. So a high number is good, a low number is not good, and if it's too low, it's bad. Relax. Even if you have a low number now, smile, because you can get a high number, a good credit score, with some focused effort and tweaks. Generally speaking, there are two major credit scoring companies, FICO and VantageScore. They each have their own scoring method. FICO, over 40 years ago, the Fair Isaac Corporation, created the first credit risk score. That score is composed of financial details within a borrower's credit report, and it's used to calculate a projected credit risk score. In turn, companies often use that score to determine what they should offer a person or borrower, such as how much money to offer for a loan, interest rates on loans for vehicles or homes, what tier of insurance coverage to offer and what cost, and even sometimes whether to qualify a candidate for a job based on the level of fiscal responsibility demonstrated. FICO is the prominent player in the business. In fact, the FICO model is used by 90% of top lenders, and they produce consumer credit scores that most financial institutions use when figuring out if they should lend money or issue credit. VantageScore is another credit scoring method which, believe it or not, was developed by the Big Three, Experian, Equifax, and TransUnion, in 2006. Not too different from FICO, the VantageScore uses a similar scale and similar analyzing factors to rate an individual's creditworthiness. The main difference between FICO and VantageScore is FICO requires at least one 6-month or older trade line and one trade line with activity over the last 6 months, whereas VantageScore only requires one trade line with no age requirement. There are even different versions of the calculation methods used by FICO and by VantageScore. You will find that your credit score is different for one loan if compared by various lenders, because each can use whatever version they want. Firms today may be using FICO Score 8, 9, or 10 suite, while other firms may be using VantageScore versions 3, 4, or 4 plus. Each version may include alternate factors, weigh the factors differently, and even offer nuances on what they're looking at inside the consumer's data. Scratching your head yet? For sure. That can be confusing and frustrating. Well, let's move on to the major credit bureaus. The term credit bureau and credit agency are used interchangeably. They are the firms that provide an official credit report to companies about consumers, you. While credit bureaus are not the ones assigning your credit score, they are the companies collecting lots of financial behavior and data on you. They also use the information from the credit scoring company to include in the credit report that they create about you. Think of all your financial data as a series of small puzzle pieces, each one being a picture of one of your financial transactions or behavior. One piece by itself isn't very telling normally. Collectively though, over time, those pieces capture trends. After putting all those pieces together, a real clear puzzle of you and your financial behavior is presented. Then all that information about you is packaged in their company's particular style of report and then sold to companies seeking a credit report on you. And selling that data is big money, billions of dollars every year. Did you know there are actually several credit agencies collecting this type of information about you? It's not just the three most people think of. You for sure know the big three. They've been around a long time. There's Experian, there's Equifax, and of course TransUnion. And a recent strong contender, now considered the fourth credit bureau, is Innovis. They have a serious foothold in the marketing segment due to their significant and reliable database of consumer information. They do not provide a credit score, but they do offer businesses a reliable method to authenticate consumer data, which is commonly used in marketing. There are more credit agencies, but you may not be too familiar with them. PRBC, Sage Stream, and even ARS, Advanced Resolution Service. Each of these companies use slightly different scoring models to measure credit scores, but as mentioned earlier, the FICO model is used by 90% of top lenders. That is a lot to take in. With all that information, you can still break it down more and really get to know and understand your credit report and credit score by starting with the main FICO score and Vantage score. FICO scores look at data in 5 main areas, and you really want to know these. One is payment history. It accounts for about 35% of your score. The second is accounts owed. It accounts for 30% of your score, and it is total amount of outstanding debt. Your total debt, number of accounts with balances, your CUR, and your type of accounts. CUR is the credit utilization rate. Number 3 is the length of credit history at about 15%. Number 4 is credit mix, accounting for about 10%, which is your types of debt, like car loan, credit cards, etc. The 5th is new credit, and that's about 10%. FICO scores range from the poor 300 to the exceptional 850. A range from 300 to 669 covers poor and fair, while 670 through 739 is good and should be your starting point target. 740 through 799 is very good, providing you great deals, and anything over 800 is exceptional, with the caveat of it is also pretty rare, but awesome. Vantage score is very similar to FICO with their scoring levels. 300 to 660 is basically subprime, not prime. 661 through 780 is considered prime and good, while 781 to 850 is super prime, with the caveat again, it's rare, but awesome. So take all that stuff and remember, your data and score are gathered from lots of your personal financial information, such as your bill payment history, the number of loans you have and the balance of each, your current debt, your bankruptcy history, and even lawsuit records. That's all packaged and sold to lenders, potential employers, insurance companies, rental property owners, and in turn, it's all used when you are seeking to be approved for credit, loans, rental property, insurance, and yes, even employment. Let's just say that, safely speaking, you need a 720 credit score to be in good standing generally. Now let's say you are at about a 640 and know that you will need a car in the next 6 months or so. The question is, how do you fix your credit score and get to that 720 good mark? It's not that hard, honestly. There are some common and trusted methods to improve and repair your credit score, but it does take some focus and discipline to A, make consistent on-time payments, B, keep the balance low if not at zero, C, inquire about a credit increase on your existing accounts, D, review your credit report and dispute any errors, E, apply for the best card to help build credit, F, avoid multiple credit cards. Finally, keep good standing accounts open since their age does help. And back to that 720 credit score, the one you need because you're at about a 640. Whether you have a credit card or will be getting one soon, proper use of your credit card will help boost your credit score fast if you manage it responsibly. Be aware of these 7 easy credit card behaviors so you can boost your credit score quickly. 1. Don't max it out. Stay well under your credit limit. 2. Don't ever miss the payment due date. 3. Pay your card off each month, and if able, don't use it much. 4. Pay attention to your credit card balance. Keep it low. 5. Don't draw cash from a credit card. 6. Only have one credit card. If you have more, put them away for a bit. 7. Get help from financially smart people that you trust. If you don't know anyone right now, research and study material like this video. You might even want to check out the Money Mystery No More video called Credit Cards and Credit Card Use. One last note to mention is you might consider getting a secure card. This is another common way to build credit fast and be forced into responsible spending habits. You basically load the secured card with your cash, and that amount becomes your spending limit on the card. If you use it up, you will have to put up more cash. If you use this option, make sure your credit issuer reports credit activity to all of the big 3 credit bureaus so it actually helps improve your credit score. Going through all the effort to improve your credit score is rewarding. You will be in control of your money and your credit history. Unfortunately though, there is a lot of fraud and hackers may get access to your credit card or bank accounts. You will be doing yourself a huge favor using a credit monitoring service to track your transactions and credit score and history. It will basically keep an eye out for red flags that might signal identity theft or fraud. Your bank account, insurance company, or credit card may offer a service for free. You can also check online once a year for a free annual credit report at www.annualcreditreport.com. At this point, you've taken in a ton of information, so congratulations. Continue your education journey about credit cards, credit scores, and more by doing a lot of research through sites such as nerdwallet.com or bankrate.com. And more importantly, remember, hit that subscribe button, turn on notifications so you keep getting the latest and greatest information from Money Mystery No More. I'll see you in the next video.